Canadian auto workers reached a tentative deal with Ford Motor Company last night, putting the pressure on competitors. I'm Catherine Rampell reporting for Business Day Live. Later in the show, I'll talk with Patrick Scott about how prosecutors have been lending out their letterhead to debt collectors. But first, we turn to Canada. I spoke to Ian Austin, our correspondent in Ottawa, about negotiations with auto workers earlier this morning. Hi, Ian. Thanks for joining me.
Hi, Catherine.
So tell me a little bit about why this tentative agreement is such a big deal.
Well, the Canadian auto workers in this deal, they gave quite a bit, but they also managed to maintain principles which were very important to them. That is much of the existing pension plan, and more important, the principle that new hires won't be perpetually paid lower wages.
And these
Those
are
were
concessions.
key issues for them and key sticking points with the American manufacturers.
Right. So these were concessions that the American unions had already made years ago, right?
Absolutely, that's absolutely correct. So they stuck to their guns, and by yielding a bit, I mean, the newly hired employees now have to wait longer. 4 more years longer to get full wages, but at least they'll get there.
So why is it that the Canadian unions happen to have so much bargaining power, especially considering the economy is still not in great shape?
Well, the economy may not be in great shape, but it's in great shape here in Canada, but most of the cars that are produced here go down to the United States, and right now car sales are hot, and conveniently for the Canadian Union, a lot of cars that are very popular in the American market at the moment come exclusively from Canada. So no American manufacturer, I think, is very interested in seeing that supply cut off.
The exchange rate has changed, though, between the Canadian dollar and the U.S. dollar relatively recently, which means that Canada no longer has an advantage in terms of cost, in terms of labor costs, for producing these vehicles. Why didn't Ford, for example, just say, you know what, hey, the American unions put up with these particular concessions. There's no longer an advantage for us to produce these cars in Canada. We're going to close shop and move our production elsewhere.
Well, I think there are a number of issues related there. In the case of Chrysler and General Motors, Canada contributed disproportionately to their bailout, so they're required to maintain a certain level of production for a few more years. But if they did pull out, it would be devastating for the Canadian economy and would probably destroy the companies in the Canadian market. Honda and Toyota have large facilities here, which they are expanding at the moment, and I'm sure they'd be very happy to fill that void.
So what happens now? There's this tentative agreement with Ford, but there are continuing negotiations with the other two big automakers, right?
Yes. The union is adamant that its traditional approach to bargaining will be maintained, and that is it gets a deal with one company, and on the key points, things like pensions, wages, and so on, the other two companies buy in. It's called pattern bargaining. Last night, they extended the negotiations to allow Chrysler and General Motors to review the Ford contract. My sense from the union is that this afternoon we'll know whether or not those two companies are willing to accept the broad principles of the Ford agreement. If they don't, there'll likely be a strike within 24 hours.
Okay, well, thanks very much, Ian, for joining me today.
Thanks, Catherine.
Finally, we reported earlier the district attorneys in some states were cutting deals with debt collectors. Patrick Scott is here to discuss the practice. Patrick, thanks very much for joining me.
Sure.
So tell me a little bit about how this works. How are these debt collection agencies teaming up with prosecutors to go after people who passed bad checks?
Well, as our reporter Jessica Silver-Greenberg had shown us, that we have documented there's more than 300 of these agreements around the country, and so the district attorney's office partner with these debt collection agencies. And the partnership allows them to then send letters on the letterhead of the district attorney's office.
So the debt collection agencies send these letters out?
Send them out to everybody in that district who has written a check that bounced. And so the letters then tell them you have to pay that check back, but you also have to pay an administrative fee, and you also have to take this class that could be like $150 or $200, and that is part of the program that would allow you to avoid prosecution. The trick on these things is that most of the time these cases don't lead to prosecutions even when people ignore the letters.
So what are the prosecutors getting out of this? I mean, they're lending out their good name to these debt collection agencies to make these threats that sound like they're very rarely carried through on. So what do the prosecutors get out of this?
Well, in the big picture, they do believe that if people have written a check, that it's their obligation to make good on that. So the merchant first in most of these contracts has to notify the consumer that that the check is bounced, and then they give them a period of time. In some of the cases, it's only 10 days to let them pay the check back. If they don't, the letters go out. So the district attorneys argue that if you didn't pay your bill, that you're obligated to pay it. That's the first thing. And then they also get either annual fees from the merchants, or they get a cut from the classes.
The prosecutors do.
The prosecutors do, right.
So
and they also have the goodwill of the merchants who they help collect all this money over a period, and they're elected officials, the district attorney, so that can help too.
So what's the deal with these classes? If I write a check and it bounces, I get this threatening letter saying I have to take a class. What is the class supposed to teach me?
It's a disconnect with the class. And Jessica ends the story by quoting one of the victims, or one of the consumers, who, if the class is intended for people who intended to defraud the merchant by committing a crime, you would probably have a class that puts you on the straight and narrow and tells you
a rehabilitation type class, right?
Right, but it's more of a finance and budgeting class. So it's a way for them to extract a lot of money from people who may not be able to afford these classes, or who really don't need the classes. And that's one of the criticisms, that the attorneys who are suing these debt collection firms are arguing that the debt collectors really don't have the authority to threaten prosecution, because none of these cases have been reviewed by a prosecutor to determine whether there was intentional fraud or it was just a budgeting mistake.
So the classes are not mandated by the prosecutor, right? It's just the debt collection agencies saying, hey, we're trying to collect this money, and by the way, you have to enroll in our course, which is going to cost you $150, $180 or whatever.
So the letters definitely do give you the impression that if you don't pay the bill and also take the class, that you still could face up to a year in jail for this misdemeanor offense.
So what are is all of this legal? I mean, it seems kind of shady.
There's been court cases that have gone in each direction. Some have supported the people who have sued, the consumers who have sued. Some have not found fault in all of the areas that the lawyers have claimed against the debt collectors, but it's still being litigated in a big class action suit in California now. So we'll just have to see how that plays out, and whether or not this will spread further to other district attorneys, or that it would be restricted because of a ruling against them.
Okay. Well, thanks very much for joining me today.
Great. Thank you.
That's all for today. Please stay with us online at nytimes.com for continuing coverage of these and other stories. I'm Catherine Rampell, reporting for Business Day Live. Thanks for watching.